I asked, is gold on a launch pad, in May? I brought up that while June gold arrived at an ostensible new record high at $2,085.40 per ounce, the non-stop prospects contract quit ascending at a similar level as the 2022 $2,072 high. The technical formation appears to be much more significant in late May than it did a few weeks ago, with gold futures falling $100 on May 26. Toward the beginning of May, I featured that every revision in gold had been a purchasing a valuable open door since the 1999 low. Furthermore, the price has been supported by government purchases to increase gold reserves. While the $100 decline from the high is a simple blip on the drawn-out diagram, the latest high can possibly be a huge top. Then again, the chances favor one more brilliant purchasing an open door en route to one more in a progression of record tops. A double top formation in gold futures. Despite the fact that the June COMEX gold futures contract reached a new nominal high on May 4 of $2,085.40, the continuous futures contract was unable to achieve a new high. The rise to $2,072 per ounce, which is the same price as the high in March 2022, is highlighted on the 20-year chart, creating a double top on the long-term gold chart. Twofold top and base arrangements are inversion outline designs in specialized examination. The gold futures market experienced a sell-off on Friday, May 26 when the price fell below $1,950 due to the failure to make a slight new high. De-dollarization upholds higher gold costs. National banks hold gold as an unfamiliar cash-save resource, approving gold's job in the worldwide monetary framework. The precious metal has been net bought by central banks, governments, monetary authorities, and supranational institutions over the past few years. In 2023, central banks continue to purchase gold after purchasing a record amount in 2022. De-dollarization, which threatens the United States dollar's status as the world's reserve currency, has been led by China, Russia, and their allies. A significant development is the move toward a BRICS currency to compete with the dollar. The oldest and most traditional of assets, gold, is now a vehicle of central bank revolt against the dollar, Ruchir Sharma wrote recently. The U.S.'s current debt ceiling problem and the possibility of a credit downgrade only make gold more useful in the global financial system. The Bank of England mistook gold for a barbaric economic relic when it auctioned half of the UK's gold reserves at the end of the 19th century. Gold has made more promising low points and better upsides since the 1999 $252.50 per ounce low. The pattern towards de-dollarization favors higher gold costs. Expansion stays an issue. The Fed expanded the transient took care of assets rate by 5% since WAC 2022, and quantitative fixing has placed vertical strain on longer-term financing costs. However, the legacy of the global pandemic, which led to inflation reaching its highest level in decades, continues to present a challenge for the U.S. central bank. The U.S. and global economies continue to be affected by supply chain issues, the tsunami of government spending and stimulus, and the tidal wave of liquidity from central banks. Although supply-side economic issues remain beyond the reach of monetary policy, inflation has stabilized and turned lower over the past few months as the impact of rate hikes on economic demand has been felt. In addition, the prospect of a debt ceiling impasse with U.S. debt exceeding $31.7 trillion may result in a credit downgrade, which will increase inflationary pressures by reducing demand for U.S. government debt securities and the value of the U.S. dollar. A lower credit score will make unfamiliar and homegrown financial backers request higher rates for security buys. Higher expansion and a falling U.S. dollar are bullish elements for gold. The No Limits alliance between Russia and China in early 2022, Russia's invasion of Ukraine, and China's plans for Taiwanese reunification with mainland China have bifurcated the world's nuclear powers with significant geopolitical ramifications, whereas the global pandemic briefly caused the world to join forces to combat the virus in 2020 and 2021. Geopolitics support gold. Since February 2022, there has been a significant increase in the likelihood of another world war. There are three reasons why geopolitical tension is positive for gold. Due to its high value, gold is an essential source of flight capital during wars. China and Russia are the countries that produce the most gold, and it is likely that they have taken in domestic production to build reserves. Consequently, governments may have purchased even more gold than reported by central banks. In China and Russia, gold holdings are state secrets and a matter of national security. Although the yuan and ruble are not freely convertible, substantial gold holdings may be able to support their values if the BRICS nations band together to oppose the dollar. In WOC 2023, President Xi told President Putin, "Change is coming that hasn't occurred in 100 years, and we are driving this change together." The primary concern is the ongoing international scene upholds gold. Despite the recent bearish technical formation, the long-term bullish gold trend appears likely to continue. I favor the upside, but double tops are a dangerous sign. The outline tracing all the way back to 1975 when gold started unrestricted economy exchanging the US features the more than 2-decade positively trending market. Critical technical support for the long-term bullish trend is found at the September 2022 low of $1,613 per ounce, despite the fact that the price may continue to correct after the 2022 to 2023 double top. Every drop in the price of the precious metal since 1999 has been a golden opportunity to buy, and governments and central banks all over the world are likely to buy more as the price falls. Even though an explosive rally may have been delayed by the bearish technical pattern, gold's bull market remains solidly intact in late May 2023.